Hey guys, and welcome to the first episode of Dance Educational Threads. Throughout the years, I've written many threads about things like taking profit, risk management, market structure, liquidity, you name it. I think a lot of people actually also follow me through those threads. You might also be one of those people. And a while ago, I've had the idea that with my new YouTube channel, why don't I just go through all those threads throughout the years and one by one make them into a short, easy, and simple to follow video format? So, with that, here's the first episode about taking profit. And you might have recognized this. This was my thread I wrote in March 2021. At the time, we were trading about like 50 or 60K ish. Shortly after, in May, we had a huge dump. So I remember a lot of people saying then and even much later in the bear market that they were very happy that I put this out at the time, which was kind of coincidental. But obviously, at the time, I was also taking some profit myself. Um, so with that, just always remember it's important to take profits. And you might be early, you might be late, but in the end, taking profit is the only thing that's gonna save you from holding all your bags down the entire cycle. Because trust me, I've done this in 2017. It was my first cycle. I mainly held IOTA at the time. It went to like the 13 market cap and to like 550. And I held it all the way down in 2018, 2019, and it was worth like 15 or 20 cents at the time. And eventually I got rid of it. Um, so yeah, it really helps to have experienced something like that. But in the end, you're gonna have to plan this out for yourself, experience it yourself, and then work with that. So let's dive straight in. So a few important things that will always be something that's difficult and something you should always keep in mind. Make a plan in advance. So currently, I am starting to work on this a bit. I did this when I wrote this thread in 2021. Just have a plan. Like, don't set like certain dollar amounts because let's say your portfolio is worth $1,000 and you say, okay, I'm gonna cash out at 10,000, but the market just doesn't get there. You don't reach it, and even though the market is super overheated or whatever at some point, but you didn't really reach the amount you wanted. Um, and due to that, you're not gonna cash out anything. It's just a shame, and I think you can better either have these set amounts where you're gonna take out some profit, so like a set price on Bitcoin, or like even if it's super overheated, you're gonna take some more out, for example. It's better to do that than be really fixated on one amount because if you do that, you're likely gonna overshoot or undershoot maybe even, and just this fixation on one number can really throw you off and make you forget about what's happening. And the top signals might be right in front of you, but you're just too eager to get that number. So stay out of that and just make a proper plan. Keep your emotions out of it, and I mean we're gonna go through that in this video. Next up, the second point: be happy with what you've taken out, and don't worry about it afterwards. Um, Everyone has this. Like you sell some coin or you sell 10% of your portfolio, even though you're up, let's say 5x that year, but still it goes up more afterwards, and you're like, I could have made this amount if I held it. But just be happy. More often than not, when I really cash out to fiat or whatever, and it's on my bank account, you can really see the euros or the dollars or whatever. It makes you realize how much it actually is instead of it just being some kind of magic internet coin. So usually this does feel quite good, I would say, even when everything is going up. If I speak for myself, that's the moment I do get anxious, and I'm like, oh no, it's going too fast. There's some big correction happening. So in that case, even just taking a little bit of profit out can really help you just ease your mind and be chill going forward. And then next up, understand it's impossible to sell the top. It should be pretty straightforward. But I mean, some people still attempt it, and everyone tries to get as close to the top as possible, of course. But it's basically impossible. That's why I just really like this strategy, which we're gonna talk about in a bit, about just like you DCA in, so you dollar cost average in, you buy on the way down, you buy a set amount each week or each month or whatever, or at a certain price. I also like to do that on the way up, so I'm slowly scaling back out. So I'm gonna sell something every week or every month or at a certain fixed price on the market cap or on Bitcoin or whatever. And lastly, keep in mind, if you end up the cycle in profit, you're already outperforming the majority. Obviously, people that are in the space now, if we get another huge cycle, hopefully most of them make profit because we're early. And in the end, the last few months or year of a cycle, there's obviously all this new money and new people coming in that are in the end providing extra liquidity, and usually those are the ones that are holding the back on the way down, just like I did in 2017 and 2018. But still, even the people that are around now, a lot of them don't take profit or they take too little, and then they might also make some mistakes in the bear, which everyone is guilty of, and some of them even end up making a loss as well, even though they have had this huge cycle, but still, due to not taking enough profit out on the way up when things got really crazy, they just lost money, which is a bit of a shame if you've been this early. All right, heading into the strategy, which was originally in the thread, which is super straightforward, and obviously you should adjust this thing, or if you even like it, do whatever you feel like. It really depends on your longer time frame view. If you think Bitcoin heads to 1 million in the next few years, obviously you're not going to take profit at 100k or like 200k if you're really certain on that amount. But if you think Bitcoin tops at like 100k, for example, then you might want to take some out at like 70 or 80 or whatever, because you should always give yourself some margin for error, because even if you're really confident, it might just barely reach your point or just not reach it quite yet, and then it might be nice to have some capital sitting on the side before that point if you're wrong. So the strategy I laid out in the thread originally was taking out set amounts of your portfolio at fixed Bitcoin prices. So for this example, this is just an example. Keep in mind, this is not what I'm doing right now. I've yet to really make this plan myself for this cycle. But it was something around this last time around. So we have all these round numbers on Bitcoin, which is like a 10%-ish increase. Obviously, that goes down a bit, but it's like 5K increments. So what I did last cycle is I set these amounts, and I was like, okay, every time Bitcoin goes up like another 5K increment, and I think I started doing this at like 40K. So at 40K, I took out 5% of my portfolio, and I took it from Bitcoin or whatever altcoin that did well or whatever. I just took 5% of my total portfolio. So if my portfolio was $1,000, I took out $50 at the moment Bitcoin reached 50K. No question asked, doesn't matter how good it looks, how bad it looks, I just took out 5%. Then next week, Bitcoin was up another, and it was at like 45K, for example. So then I just took out another 5%. In this case, my portfolio overall was still compounding, of course, because going from 40 to 45K is about 13%. So me just taking out 5%, yes, it does scale the compounding effect a bit, but overall my portfolio is still growing, which I was fine with because I didn't think this was really the moment where it's gonna top out just yet. So I did want to scale down a bit or slow it down a bit, take some profit, get some fiat on the sides, as I was mostly allocated into crypto as well. But I still wanted to give it room to grow. So then from like, I think 50-ish K, in this case I have written down 5%, but I think in 2021 I was taking out, I think 10% at each 5K increment. So at 50K I took off 10%, at 55K I took off 10%, 60, 65, and I think I even hit something like, because it wicked somewhere, so my 70K sell or whatever, because we went to like 69 something, it did get hit somewhere, so that was pretty nice. But yeah, I just kept going like that, and just depending on what your expectation is roughly and how quickly you want to scale out. If you still want your portfolio to grow or not, you can, of course, take out like 10% or 20% at every increment. But the nice thing about doing this is just having these set amounts, and um, if it's easier for you, just set an alert on these levels, like set an alert on every one of them. Alert goes off, nice, market went up. I'm gonna now take off X amount of money again. Um, in this case, this is just an example. I think this would make sense, for example, in case you were expecting Bitcoin to go above 100K, for example. So initially, obviously, this is all very, very personal, and I can't give financial advice and don't know your financial situation in this. But um, obviously, if you're really allocated into crypto, it might make sense to take a bit off earlier before, because then at least you have some on the side. But if it's just a tiny percentage of your total investment portfolio, then you might just want to try and get as much out of it as you can and just ride it as high as possible and only sell some when it's really getting super crazy, for example, which, I mean, we're nowhere close right now. Um, but yeah, this was just an idea. So, for example, you take out tiny bits, and then upon reaching new all-time highs, you start scaling out a bit more. And then when you reach like 100K, for example, you scale out more heavily. And at some point here, of course, as I still did these 5K increments, you can, of course, also do 10K or whatever, or certain percentages. Um, Here, if you scale out 20% every 5K increment, obviously you can understand these steps are only like 5% or so at this point. So if you're taking out 20% every time, from here on out, your portfolio will actually start going down, and you will start scaling out more aggressively as the cycle matures. So with this, you can just play around, do what feels, what you feel comfortable with, what gives you ease of mind and really helps you. But it is smart to make something like this, or like whatever works for you, in advance, because we all know, let's say a year from now, we are trading here and everything is going up vertically, everything is crazy, and you get all this volatility and you don't know what to do. It's nice to have already set this in advance when times were not as crazy. So somewhere in in the next year or so, um, I would assume, where you still have time to set this up and really get your plan going. Because when it's crazy, emotions are high. You're gonna get scared. You're gonna get euphoric. It's all going through these different phases really quickly, and it's at that point it's really difficult to be objectively and really know what you wanted to do beforehand. Like maybe your goal this cycle is to double your money, which you might have already done, for example. So, but the thing is, people will always scale up their expectations and things, and when the euphoria is high, at this point you're like, oh, why can't it just double again, you know? And then you just hold on, maybe take on even more leverage to really squeeze out the last bit of money. But then all of a sudden, the bear market starts for whatever reason. Things are were too crazy. Things go down, and then you're holding maybe even with leverage, and it's starting to come down. You're waiting for another one more push up. Then you're gonna take profit, but it never comes. It never comes. It just keeps bleeding, and then before you know it, you're back in the bear market depths, and you didn't take out a single cent. Well, if you had some kind of plan in advance, you would have already slowly scaled out, be pretty chill about it. Maybe even sometimes you get these mid-cycle dips. For example, in 2021, this was a pretty huge one. So maybe if you've already taken out some profit here and you're pretty confident, okay, cycle's not over yet. At that point, you will have some fiat or stables on the side. So you might even look to deploy them in case you get some kind of really big correction and you're certain that the cycle isn't over. One important thing to say about that is, of course, if you take out profit, usually it's best off just keeping it that way, because you scaled out for a reason, and redeploying can be dangerous because you might redeploy in the dip that keeps on dipping, you know, like the bear market just continues, and That's one mistake I made this time around. So I took a good amount of profit at good prices, and then 2021 I already started, 2022 I already started deploying after the Luna collapse, all that kind of stuff, for example, because it was so crazy. But I mean, we were only trading at like 30K ish, so we weren't down that much, and I started deploying already at that point. Obviously, right now that we're up from that point, but since then we did drop down another 50% or so, and there were many months which Bitcoin was trading at like 20K or lower. So there was a much better time to deploy. Obviously, this is in hindsight, but I could have known because mostly we go down like 80-ish%. And when we were trading at 30K, it was only down like 55, 50, 60%. So me deploying here already was too early. And I think in hindsight, it's easy, but looking back on it as well. So that's something you should keep in mind. And usually it's best the profit you have taken, just keep it that way, and then leave it where it is and just chill, be happy with your profits, and go from there. So might have been a lot to take in, but I try to keep it as simple as possible and explain all my thoughts. Play around with this or something else, whatever works for you. You might just do some kind of strategy where every time everything is up 50% in a week, you just sell a good bunch, or you do something else. For me, this works because it's really easy to keep the emotions out of it and just have a plan ready. And see what works for you. But the most important thing is to have a plan and get a plan before things get too crazy. Because when you make the plan, when things are going crazy, you're gonna overshoot your expectations, and then you're gonna end up holding the back in the bear market. All right. Thank you all very much for watching. I hope you guys enjoyed. Next up in this series would be the risk management thread. So the basic risk management of measuring out your risk reward, your probability, all that kind of stuff. So I'll see you whenever I get it out, somewhere in the next couple of weeks probably. And for now, I do wish you guys a happy Christmas and happy holidays. And have a few good days, and I hope you enjoyed. Bye bye.